starting your journey to financial freedom. Now, you're listening to the New Investor Podcast.
This is Faraz CJ for the New Investor Podcast. Please excuse some of the noise that is around me. I'm at home. I finished a long day and I wanted to talk about one of those episodes I made not so long ago, and I had fairly a high level of certainty that we would not end up this year without some form of a trade deal with China. And right now that possibility actually happened at a certain degree, of course, and has boosted investors' confidence on the markets, coupled with solid economic data coming out of China that was delivered a few days ago. So the markets have closed at a record high on Monday again, and my account value as well. So some of the investors will certainly be skeptical of such a healthy market and are preparing, I'm sure, for a major correction in the next few months, as I am, because it is simply inevitable. And I am to prepare for another successful year, of course. So preparing here means continuing with my strategy, which has worked fabulously well in 2019. Keep saving, keep increasing your positions on your favorite stocks at the right time, and explore new investment opportunities on the markets, as well as keep building other sources of income, as I am trying to do. It's not easy at all. Nothing is easy when you want to get onto your path to financial freedom. So on that, the most difficult part of my journey so far remains the input towards attempting to build side businesses, which is a completely different ballgame, believe me, than investing on the markets, and requires a different set of skills altogether. So the underlying mindset required to make progress as an aspiring entrepreneur, as I am today, in this case, remains the same as being an investor. But for every step I have been taking so far, I was forced into learning or understanding a whole new craft in order to make any form of tangible progress. So this is all very exciting, of course, but in the meantime, you are leaving money really on the table with no returns possibly matching the input so far. But what I was really thinking about is, what is this energy that keeps one on track, what keeps one focused, hungry, and that does not allow you to stop right here and there, even if every part of your body summons you to do so. And I realized that it is all happening subconsciously, as if it is the way one was built. Some people will say that you're born this way, born to be an entrepreneur. Well, I was not at all, I guarantee you that. And quite the opposite, actually. No, I discovered that a new purpose of mine through execution. Actually, my life purpose was entirely self-made, and I don't believe in the so-called genetics behind success. We today all have equal chances to build something meaningful for ourselves, provided you have access to the internet. And the playing field of success, ladies and gentlemen, has been leveled for the first time in the history of mankind. Now that this completely clarified on my side, let me revert a little bit within the context of investing in this case. And what used to be reserved for the elite since forever is now accessible to all. Becoming a shareholder, that means owning capital of another corporation without being liable for its debts. Owning shares of that company, that is a new status that everyone can acquire, being an owner. These shares prices would appreciate over time according to the law of supply and demand. In other words, you have now the possibility of becoming an owner with one click. Now, to become an owner of capital, you will simply need to save, avoid taking on debt, and reinvest those savings into your capital for investments and buy shares of companies. The more capital you own, the more wealth will be created over time. ownership is what creates wealth. The more you own, the less your wealth will come from the fruit of your labors. The more it will come from your capital. It is imperative that you start shifting money created through labor towards owning capital. You can only start doing that today through savings. Now, stop spending on things that keep dragging you away from that objective. We need to talk mindset more often on this podcast, I think. So another news hit us only yesterday was that President Donald J. Trump of the United States has been impeached by the U.S. Congress, and he will be going to trial in front of the Senate next year after their winter recess. And that may sound like a pretty scary news, but considering that the Senate has a Republican majority, the markets have not reacted to the news and still closed that day at an all-time high. Now, will this news affect the trade talks between the US and China? Will this affect Trump's chances of being re-elected next year? I don't think so. I still see a much stronger rally around him from his party, with much more donations going into his campaign. Now, if this does affect his chances negatively, we will certainly have less opportunities to face a similar volume of market dips and corrections in 2020, which is not a great news, as having an unpredictable president in these United States is good for the investors, while obviously being a concern elsewhere. But we are investors talking about investing here. So as far as I am concerned, all this will not change my investing strategy. And should I be investing my cash into money markets for a full year until all of this passes, then so be it. Money market funds are a great way to park your cash for the short term should you feel that the markets are overpriced or subject to too much volatility. There are still a direct access to liquidity and consistently generate low returns to the investor, which is usually a good thing when the markets are on their way down. Now, still important to know that they are less safe than cash, and they're still subject to inflation. But instead of losing 3% value on your cash due to inflation, the return will actually cover for, let's say, 2%. You'll end up losing only 1% in value on your cash. Still better than sitting on pure cash piles. Now, make sure your brokerage account platform does not charge you a lot of fees, as you'll quickly end up paying to have your money parked there. My brokerage platform charges me $3.99 per lot that I buy or sell. So I'm not charged for holding my investments over a long period of time. It is a very straightforward and cheap to trade with platform. And if you live in Asia, I highly recommend Saxo Markets, and they are not paying me, of course, a dime to say that. Now, I still prefer common stocks than money market funds, as they have much better returns but a much higher risk. And if you're a young investor with some disposable income that you're able to invest on the stock market, you have a higher tolerance to risk because you're blessed with the most important commodity allowing you to build wealth. You have time, and markets always recover stronger over time. I would not invest all your cash with an objective to retire in money market funds, but yet again, I can't advise you directly on what to do with your hard-earned cash. I usually am quickly in and out of money market funds, so I have learned through the journey that money should never sleep, and that I am to constantly look for ways to grow it and for it to work for me while I sleep. Now, in the meantime, be well and stay invested. Thank you for listening to the podcast, and I really hope that it brings you some additional support on your own journey towards financial freedom. Don't forget to hit that subscribe button to never miss an episode, and looking forward to your DM and follow on Instagram at New Investor Podcast. In the meantime, stay invested, be patient, and keep playing the long-term game.